What are global indices and how it affects the Indian stock market? If you're a stock market investor, you've probably heard of the term dollar index. Did you know that dollar index is one of the macroeconomic factors that can help you understand the current state of the Indian stock markets? In this video, let's explore how macroeconomic factors influence the price movement of Indian stock markets. Both macroeconomic and microeconomic factors influence the movement of the Indian stock market. Macroeconomic variables affect the entire economy or all sectors, as well as individual equities influenced by microeconomic factors. What are macroeconomic factors? The global markets are interconnected, and impacts can spread quickly across markets via portfolio investors and hedge funds. Many of us saw how deregulation in banking sector contributed to the global economic fall in 2008. Due to the 2008 financial crash, the Indian stock markets fell around 20% by mid-2008, mirroring other global stock markets. Macroeconomic factors that affect Indian stock market. Dollar index. The dollar index is one of the macroeconomic factors that has a significant impact on Indian stock markets. As a trader, you should be aware that the dollar index and the Indian stock market have an inverse relationship. When the dollar index falls, FIIs, foreign institutional investors, invest more in Indian stocks, which provide higher returns than dollars. The technical analyst can easily compare the dollar index to the Nifty 50 to determine the market's current situation. The Indian stock markets have suffered as a result of the rising dollar value. When the dollar index rises, share prices in industries such as banking, automobiles, oil and gas, capital goods, and metals are likely to fall. If you are a regular trader, you can benefit from comparing the dollar index with the Nifty 50 index using technical charts in technical analysis. Crude oil. The crude oil price and the Indian equity market also have an inverse relationship. The Indian oil industry is a major oil importer. Oil price fluctuations have a direct impact on industries such as tires, logistics, refineries, airlines, lubricants, and paints. US 10-year yield. US bond yields have a global impact because they attract funds from investors all over the world. When yields rise, it indicates that the Fed may raise interest rates to control inflation. As a result, many FIIs and global investors may withdraw funds from Indian stock markets and invest in these bonds. As a result, stock prices in India may fall. US market indices. Globalization has resulted in the creation of a single global economy, with global financial markets operating in sync. Because we are connected to the rest of the world through various businesses, each company is linked to another, either directly or indirectly, to achieve their goals. The United States, as we all know, has the world's largest economy. Any negative news in the US markets has a significant impact on global markets, particularly the Indian stock markets. The 5-year charts of the Nifty 50 and the Dow Jones Industrial Average reveal a strong correlation between the two markets. Regular stock market traders should review all of the macroeconomic factors at least once a week to assess the current state of the Indian stock market. For more such stock market related educational videos, reach out to Accordions Business Services.